Okay, she just started the class.
Yeah. All right. So welcome once again. This big push in gold, why I did not take it is simple. I already marked up these 3 waves to the upside, and I had 3 waves to the downside, which is a zigzag. Okay.
Yeah.
And then if you take a fib of these 3 waves to the upside, take a fib of these 3 waves to the upside, you are already having
0.5.
0.5. Okay, which is cool.
Yeah.
Why do we think that 0.5 is cool? Why do we think it's cool? The reason we think it's cool is that the zigzag correction that is here already produces equal leg. This is already equal to this. So 50% here is cool, right? So apart from that, we look left. I'm going to see a very powerful, candle that breaks structure. What do you mean? Look at the resistance here. This move broke this resistance. So that qualifies this level as a demand level. Qualifies here as a demand level. You get? You can't see a red candle here. So it's nice. So I took this trade to the upside here. Okay. But it didn't go too far. It now headed down. So I kept wondering what's going on here. But then this move is too strong. Okay, and since as strong as it is, it cannot proceed to the upside like that. Then, and it was coming down correctively, then we knew that if this is a 3-way structure in the middle, we are going to need a very strong candle like this to form a 3-way structure in the middle. All right, and
okay,
yes, and since it did not get to the downside here, and it was forming a 3-way structure here, I was looking at it. What kind of corrective structure is this? I was saying, okay, if that is the case, is it possible that this will be a 3 waves down, 3 waves up, and then 3 waves down? I say yes, this is a possibility. And if this is a possibility to have an X structure, a B structure that is WXY, it then means that the legs we have here in these 3 waves should have this here. That not? So have it there. And then if I take fib extension, put a fib extension, I'm having my equal leg terminating at this level. Okay? And if it has to terminate at this level, then the next thing I have to check is to look at, I need to look at, yes, I need to look at left. And truly, there is a strong demand level here.
Yeah.
There's a very strong demand level here, which corresponds to the level I've identified at the other side. Okay, so I was waiting to get in here.
Oh, I see now.
So I was waiting to get in here. This is a comfortable place for me to get in. And if I get in here and I put my stop loss below here, I'll be safe. Anything that makes this pair, this go to come to this level, shows that my analysis is wrong. So that was why I was waiting. But all at a sudden, the news came, and it was in a hurry. It couldn't get to that level. Boom, to the upside. I see why I missed the trade. So, but nevertheless, what I'm thinking will happen right now is that this up move is just to complete a structure. Okay, just to complete a structure. This is the structure here.
Yeah.
Structure here.
Yeah.
Complete structure, and then here.
One of the big complex structure be.
Yes, 3 waves here.
W,
Okay. Yes.
X, Y.
And you have W, X, Y. It is the Y that will likely come to peak liquidity at the level I suggested before. I see.
Okay. So are you going to use your fib? Are you going to use your fib again to validate that area?
Yes. Now we have to use our fib extension. Drop it here. Drop it here. Drop it here. Okay. So you now see that if you use your fib extension, this guy is ending here, which make no structural sense. Can you see? It makes no structural sense. Therefore, the fifth level of this three-wave structure will take preeminence over equal leg. Over equal, yeah. Do you understand now? So it's going to take preeminence over equal leg. What have we done? It's simple. Let's do it again. You have a three waves down, W. Right? You have a three waves up, 1.
That's a regular, yeah. 2, 3. Irregular flat, yeah. Irregular flat. Then you need 1, 2, and 3. Correction. Yeah. Correct. So now, if you want equal leg, if you want the size of this to replicate here, then if you drop it like this, drop it like this, we are going to have equal leg at a zone that does not make structural sense. So when such thing happens, what I do is to take a fib of the entire initial push upside. It's pushed to the upside. And in this case, I will now target 78% retracement. That's what I will target. Yes. I will now target. This is between 61.8 and 78. That's the level that will make sense for this kind of structure. Yeah, to make structural sense. Yeah, that's where we make structural sense. Because at that level, you are having, you are not, the equal leg, the size of this W here. The reason why you cannot have the size of this W here as Y here is that this X is too big. You understand? Yeah. This X is too big. That's why it's going to be difficult for us to just use fib to get equal leg that will end here. It's not going to make structural sense. You understand? So now, what I'll be waiting for patiently next week is to see if you have an impulse here, correction, a push down. Once you have a push down, this will just make a perfect structural sense. Boom. W, X, and Y. Then from this level, you have three-way flow. Can you see? So that is the sense. That's what I was waiting for. Because of course, you know, if you look at higher time frame, let's look at daily. See that? Yeah. At daily. Looks like it's coming down. Yeah. Look at daily. Let's even look at weekly. Yeah. Remember, this is the kind of structure we saw in Bitcoin. When we said Bitcoin is going to come down. Three-way structure. Gold is coming to this level before we reach the upside. Whatever will happen that will cause it, I don't know. The gold will have to come down to this level. Is that a structure? Is that a demand you are seeing there? Like being able to identify that spot? It's not a matter of demand, it's a matter of structure. Oh, structure, okay. Structure first before you see if there is going to be the level that corresponds to that structure. That corresponds to that structure. Yes. Because right here, what I'm able to identify in this weekly time frame is that we have seen a two-way structure down. Yeah. Okay. And right here, we have seen an impulse. We have seen these three waves down. Okay. Yeah. Not? This is up, three waves in the middle, and up. Agreed? Yeah. Yeah. Agreed? Yeah. Okay. So if that is the case, three waves down, three waves up. Then we are going to be needing
an impulse.
1, 2, 3, 4,
2, 3,
4,
4,
5.
5. That makes this structure complete. Remember,
Okay.
we had A here.
Right? Yeah, we have a P.
Remember, we have W.
Okay.
X and Y here. Right?
Okay, what about the B?
And this is A, this W, X, and Y will now be B.
Oh, that's going to be quite big, yeah.
And then I'm going to have this again. And that will be your what? Your C.
Your C.
Then, after that, these 3 waves here will now come
It's
here.
a complex connection, yeah.
Yes. So I will now come here. To come to the level I was projecting for you. Can you see the roadmap to get in there?
Yeah. Okay, yeah, makes sense.
Can you see? Can you see? So what we are going to see in good is going to be sideways for a very long time. And the higher time frame is going to form a complex corrective structure. Complex corrective structure. But then, if it plays out like that, which I believe definitely do, we are going to be having a massive buy of gold that we have never seen for a very long time. From here to the upside. Understand? So now let's now focus on the immediate wave. Right now we want this correction to complete and we want this drop to the downside. Is that not?
To at least add that, yeah.
Yes.
That was 1, 2, 3, 4,
so
5.
Yes, you have A, 1, 2, 3. I will not make mistakes. Hold on.
No, we are.
This is
we
A,
are making
W,
yeah.
X. Oh, we are not.
Okay.
We are not. I've seen it. This is.
It's supposed to be ABC 335.
Yeah, W. It's supposed to be ABC. Yes. We cannot
ABC
say it yet. So this one will just be C on my Y.
Yeah, C or Y. Yeah.
C can be Y. So if it is 3 waves, it will be Y. If it is 5 waves, it will be C. And in that case, this becomes A, B, and C.
B.
It becomes a flat correction in the middle. Is that okay now? So, but for now, let's focus. Let's go to lower time frame and focus attention on this wave and how we can achieve this breakdown. Is that okay now?
Okay. Yeah.
So 4 hours. 4 hours. Okay. Go to 4 hours. So if we have, first and foremost, if this is wave, if this is 1, this is 2, if this is 3, and we're expecting 4 to complete, then by guideline, 4 should not get here.
You don't get there, yeah.
That 4 should not get there. So what we have to do right now is to see how we can get this construction done properly. Okay. So in that case, we have 1, 2, and 3. We have 1, we have 2, we have 3. Then you have this move. Okay. From there, you have the move to the downside. You get it?
Yeah. Exactly.
You get it? Because in that case, what we have to do is that right now, real quick, guys, we have W here. Okay, so in this, let's say this is A, 1, 2, 3. So let's use big A for this one.
Okay.
Let's use small A here, small B here, small C here.
Okay.
So this will become, let's say 1, 2, 3, 4, 5. That become
a big C.
A, B, and C. B will be here. That out.
Yeah.
And then we'll have C here.
Then your C will not be on 1.
Yes. Now I have 3 waves up. 1, 2, and 3. That is 3 waves here, W, 3 waves here, X, 3 waves here, Y. So at 1900, we're likely going to have a massive breakdown of gold on the downside. Are you getting the effect now?
Yeah, exactly.
So that's the analysis on gold. But one thing that I'm looking at right now, guys, is that here we're having a kind of equal high. So I'm going to see how this is going to play out. There's still possibility of us breaking above this level. I want to catch liquidity here.
I didn't get that place of equal high.
Say what?
You said something about equal high.
I didn't hear you.
You said something like equal high.
Yes.
I didn't really understand that part.
Yes.
Yeah.
This structure here. Okay. When we get to
regular, yeah,
price level at the right hand side. Okay. There's possibility that price we want to break into the upside to grab liquidity at this supply here. You understand? I want to do that. Okay. And if it does that, it does not invalidate this structure. Our structure is complete. It doesn't mean that since it has done that, it's going to break this stuff, break this stuff. No. No. It can. This is liquidity in action. Right? ELLIOTT has done its role in 1998. Right? A lot have come into this market. Yes, we can make some other inputs. So, and break this equal high, take liquidity from here for it fall. So that's good. Also take a look at EBP, ABD.
Yeah.
The traders, after giving almost 100 pips, just close them. But nevertheless, go to monthly right now. You see that the monthly time frame is there's no argument that we are going down. That because that the correction of 50%, and this should come down, right?
Yeah.
Come down. Okay, and if it comes down, how do we relate this structure? In relation to this. Remember, this one look very impulsive. So it look very impulsive.
Yeah.
Then mean that what is happening in the middle is it's a what? It's a wave B.
It's a wave, yeah.
And we love that wave B. We love that wave B. We come to equal legs. Okay, between with A and with C. So we want to see this, whether this will make this, we don't want to come here. Right? And that would come to this level. We want this one to come up here. Right? So
yeah, before it now flushes down.
This becomes A,
B,
become B,
C.
Can you see? It's on a monthly.
It will now form the correction for this bigger part.
Yes. And then this wave to the downside here.
Yeah.
Here to the downside.
Get down part, yes.
I see.
Yes, exactly.
So if this is what we are projecting on the weekly, then we have to step it down. Where we are going is downside. All right, downside. That's what we are going on the monthly. Let's go to the weekly to see whether that downside is ready. I see that on the weekly time frame, now we have to concentrate on this portion. Yeah. We're not concerned about this again. All we need to get, guys, we have gotten it. We need to move back and concentrate on all this. What is our business here? Only this portion on this weekly time frame. So what I do here is to get the fee of this impulse, okay, remember that the impulse does not end here, guys. It ends here. This mix you see here, as far as I'm concerned, is part of the corrective structure. My impulse ends here.
That's the orthodox flow.
Orthodox author, yes, orthodox flow. See it? So, as it is right now, we're looking for this market to get to this level. But can make a meaningful push
to the downside.
Yes, that's why I keep on shouting 1,000 pips. And guys think I'm crazy. The fact that it's not ready yet does not mean it's not happening. Okay, so let's go to daily. All right, daily. I'm going to teach you a concept right now. You see that in the process of this market coming down, it makes a pullback here. Or a drop down. Eh?
Yeah.
So experience shows that this market will never fall down until it comes to break this fall. Are you getting it now?
Okay.
Experience has shown that this market will not have a comfortable sell-off until it comes to what? Break this top where it made the reaction for it drop down. So our job now as an analyst is to define the kind of correction that is taking place here that will help us to navigate, or that will help to navigate us to that level that will break this top that we have identified. So if you look at this structure here, you'll see that let's step it down for us to get our structure right. Let's go to 4 hours. 4 hours. So you have this 3-wave structure, the upside, 3 waves down. You know why we are suffering? Why we have not pushed too much to the upside? You know? You know why? Do you know why we are not pushing very hard to the upside? This 3-wave back refused to break this low.
Okay.
If this 3-wave back, all right, 3-wave back, if it has come to this level, forget it, guys. We are not going to be at this level right now. We are not going up powerfully.
Okay.
Yes. You understand? So this is how to trade a corrective structure, a correction. When you have a 3 waves up, the 3 waves down should break the beginning of that 3 waves up.
Okay.
The origin of the 3 waves up, that's W. This one should break it to form X. This is where liquidity is grabbed. A lot of people are faked out. Many people who are selling, by the time this market pull up, they won't know. Place their stop loss here, need their stop loss. All right. So that is the essence of this X grabbing liquidity. As soon as it grabs liquidity, it's going to move up. Corrective structure. That's your trade. That's your trade. So it will be W X. And in most cases, once this X breaks this low, you are going to have a 5-wave structure here. You are going to have a 5-wave structure because 3-wave structure may not be long enough to get to this area. So you need a 5-wave structure. This is 1, 2, 3, 4, and 5. 5 just push in and grab liquidity at the level you have projected, and from there it goes down. Clearly. Okay. Do you get the logic now?
Yeah.
But now, let's now analyze this structure based on what we are saying right here. It refused to grab liquidity. That is why it's suffering. It's suffering to move. Okay? Having enough volume. 1, 2, 3. 1, 2. Well, you might say this this move is too strong. Yes, it's too strong, but it's allowed. 1, 2, and 3. It's allowed in the sense that if the three waves are strong. Let me explain something. Let me explain something. Get this clearly. You have an impulse. Impulse, impulse, impulse. The fact that these three waves are impulsive doesn't invalidate that this is a three-wave structure.
You're correct, sir.
Eh?
No.
Correct. So that is why this B is taken as a corrective structure. This may not be explained by ELLIOTT theory, but explains and shows that the current reality that we have necessitates that some moves come like this, and it can be regarded as move B if C is strong like that. I see. So if that is the case, what I'm thinking will happen that initially I was thinking this is C, right? And instead of this to be WXY, this will just be a simple ABC. Okay? Simple B and C. You understand? So when you have A, B, and C like that, you need to wait. You need to wait to see the next move. If corrective structure is coming like this, then you grab the unity, you are your way to the upside. So in that case, C is not going to end here. So here will be 1, here will be 2, here will be 3, here will be 4, here will be 5. To form A, B, and C. Are you getting it now? Are you getting it now?
Yes. Exactly, yes.
So now, what I believe is going to happen is that in analyzing this last week, okay, we have gotten this. It's very clear. This three groups are very clear. Then this impulse, all right? So what I'm thinking we are going to have is possibly a very big 2 here, all right? And we have, after having a very big one here, we now have this. Upside.
Okay.
You understand? So in that case, we are going to be having WXY. But this Y is going to be very big. This middle here, but it's creating a structure already. This one is going to come down to break this. Okay?
Yeah.
And by the time it gets here, break this move here, that will be the one that will probably grab the liquidity we are looking for. Okay?
Wow.
So instead of, I was saying we have a move, we have 1, 2, 3 before it will move. So and this 1, 2, 3 is a flat. So it can also be a zigzag. How do I mean? Watch out. You have a move.
Yeah.
You have 1, you have 2, you have 3. This has become a zigzag. Is that not? Is that not? Hello, is that not? Hello, are you there?
Yeah, exactly. I'm with you. Exactly.
I'm with you. Zigzag, then we have to move up. This trend is what is going to come to take time. So whatever the trick he wants to play, we're not concerned. We're thinking before that this has made enough field that we're thinking it has come to 78, and we took the trade from here, made us about 170 pips, but we enter at 74, give us 76, 210 pips. Yes, 210 pips, and it dropped very, very hard. Dropped very, very hard. So this drop is telling me that this push here has given us 61.8, and then this one definitely comes down to 26.
Okay.
These are the form a zigzag. Then you have a push, a zigzag, zigzag here, and then move to the upside.
Okay, so you're expecting to break for it to grab liquidity. It will break the low.
It
may, yeah.
It may and it may not.
But preferably,
the reason why it may break it is that right here, guys, you have equal low. I see. And when you have equal low like this,
stop losses. I mean, yeah.
What do you mean by this liquidity, guys? Stop loss.
Stop loss.
Stop loss is equal to liquidity. Stop loss.
Just liquidity.
Because all the people that bought here, guys, where did they put their stop loss?
Below.
Below. So there's possibility of this market. The zigzag will complete when there's equal leg. Equal leg might grab liquidity here. Take out the stop losses. And as soon as it's taken out, what happens? Our trend begins.
Push it, yeah.
This trend,
you can't push up, yeah.
Stop. As soon as this stop is taken, close your buy.
Yeah.
I told you when there's a reaction like this, you must take the top, take the fifth, space, this space, 50 to 61.8, guys, around this level. Boom. From there, expect a move to the downside. So let's allow the pair to play.
Out.
Yes, let it play. When it gets down here, we know that it will not be nice to make this structure and begin to go down. It will not be nice. That's a lot of order here that need to be taken. So it will be in our best interest to see this market coming up here before we sell. Right? So that is it about
AUD.
Yes.
Wow.
CHF. Okay. So remember, before we leave for GBP AUD, remember something that is very, very important. Remember something that is very, very important. You need to check the fundamental for GBP. Okay? And that of AUD. Even if you look at both of them have problems right now. Both of them are battling with inflation. This guy has increased his own interest rate to 1%. I think 1%. Yeah. This guy has increased his own to 0.35%. You see, I see that this one still has a higher interest rate than this. Okay. So no investors, and both of them are facing the same type of inflation. All right. The inflation this guy is facing is due to energy crisis. The inflation this guy in Britain is facing is due to energy crisis. You understand? So the inflation that is happening right now in Australia and the United Kingdom is not because of increase in output. Okay? You know, when there's increase in output, when there's increase in productivity, what will happen is that there will be increase in income. Level will increase. And increase in income level can result in what? To increase in the prices of goods and services. Okay? And that will trigger inflation. So if there is inflation as a result of increase in productivity, even though whatever happens to interest rate, I don't want to care. I want to buy into that account because I know that the inflation that is experienced there is as a result of increase in productivity. So if such country increase their interest rate in order to arrest that inflation, it is better to buy such currency than an economy that the inflation is caused by maybe energy crisis or supply gap, and not necessarily because of increase in productivity. If you increase interest rates, okay, people are not going to buy it much because they will look at the health, the soundness of your economy. That's what they are going to look at. And right now, the biggest trading partner of Australia is China. Right now, China is battling with COVID-19. Okay, and they are just easing their lockdown. And if there's lockdown in China, it definitely will affect Australia. Do you understand? So these basic fundamental data that are given you, or relationship that are given you, suggest that this move should come up. Do you understand? This move should come up because GBP should strengthen right now against interest rate is 1%. The other one interest rate is 0.3. And then if we look at right now, both of them are facing energy crisis. Right? Yeah. Both of them are facing supply gap problem. Okay, so but then for now we can work this on our interest rate differential. Differential though is not much, but we should see this come up to the upside to this level. So 6.7 downside. Understand? So let's think about and look at the whole of this area. See. How many buy candles do you see here? How many days? About a week or two, the market was just going down. Okay, this chart before you may not be in the front of your bankers, all right? But what they're interested in is the price, because the price level that they were selling massively. That's what is okay. They have a record. You get So when market comes down to that level, they don't need to look at your chart before they know that this is the price that people normally sell. See it? Institutional price level. Yes, exactly. Look at. Of course, know that Eurozone have just increased their interest rate to 0.25. But of course, I think that is 1.5. Can you see the differential? Yes. Big difference. And you know that the bigger the difference, the much trend we are expecting from the You understand? But then, already we have seen that we want a sell of blue cap. Why do you want a sell? Because you has a very low interest rate, just increased to 0.25, and this has a very strong interest rate. Investors will want to keep more of CAD than you. Then another factor that you have to check why people would like to keep CAD right now. Okay. Why people want to keep CAD right now? Another thing you want to check is that oil is upside right now. Okay, oil is upside right now, and because oil is upside, CAD is strengthening. CAD is very strong right now. So, and Euro has a lot of problem right now. Inflation, and not only inflation, they have inflation and they refuse to increase interest rates substantially. Are you still there? Yes. Okay. And then that is not even the only trouble. Right now, the balance of trade for Eurozone is negative. It's not funny at all. You can have a quick check. Trading economics. Let's go to trading economics. Okay. Go to trading economics, right? Are you still trading economics?
Yeah, I was seeing it.
Okay, look at new area. You see this?
Okay, balance of trade.
You see this?
Yeah, the balance of trade, yes. Yeah.
I see from minus 8778, 8,778 million euro to minus 16,382. So that's the trade balance. Negative. Deficit. I see. So
okay.
look at the current account. Slightly dropped from 11.43 to 8. It doesn't matter. What I'm concerned about is this. I see. I see. So this alone is making you not to find it fun right now. They are finding everything difficult. And then if you consider Canada, see Canada, where is Canada?
Below Brazil.
Eh?
It's below Brazil on the far left.
On the far
under
left.
G20, under G20, yeah.
Okay, yeah. All right. Look at this economy. Look at inflation. The 1.4 is dropping to 0.6. Can you see? But right here, from 6.7 to 6.8, so they have inflation. You know, when the economy have inflation target of what? 2%. So anything that is greater than this 2% is considered too high. And look at their own here, 6.8%. This is a very high inflation. Developed economy that know what they are doing. Okay? Right?
Okay.
So because of that, they have to increase interest rates from 1% to what? 1.5%. But look at balance of trade, 2,282 million Canadian dollar, and then it dropped to 1,501 million. But you know what?
But it's not a negative.
This balance of trade, when you look at it, people do it drop. Look at what happened here. Current account minus 137 to 5,026. Current account. These two indicators, they are powerful. So because of this alone, must be very, very strong. So this one was minus 16,000 in case of a euro. Look at card is this one minus 16,000 for euro, very negative. So with this, with interest rate, we have checked it. With balance of trade, we have checked it. With current account, we have checked it. So card is better to hold than euro. For that reason, we are looking for euro card sell.
Yeah.
And this is why we are looking for sell. But this level is a good level for sell.
Nope.
Look at it on the monthly. You will see that looking at this structure, I'm very quick to just have to conclude that based on the problem that we're having in Eurozone, I'm taking this to be a diagonal. I'm taking this to be a diagonal. 1, 2, 3, 4, 5. I'm taking it to be a diagonal. And if that is a diagonal, then I'm looking forward to getting 1, 2, 3. Sometimes you should get 1, 2, 3, and then 1, 2. So, and after that, you have a push-up again. I get what I'm trying to do. I get what I'm trying to do.
Yeah. Yes.
So this is what I'm thinking. right now. So if that's the case, you still expect this to go down a little on the monthly. Then on the daily, see that it just consolidating here. For it to move down very well, guys, you must push up. You need a push up. You need a push up to have a better push up. Look at it. Look at it here. It's principle. It's based on principle. You have this move. Okay. You need a push up. You have this. You need a push up. You have this. This is an ending structure. You need a push up. You have this. Every time, always think of when you are in a downtrend, you need a push up. Better say. If you don't have if this pair right now at this level, keep selling. Count me out. I won't sell it. Where did they pick liquidity that is where did they pick volume that is selling? But if this guy come here now, grateful to God, sell here. Who get now? That's good. Daily. So based on what I've just told you, and based on what I've just seen here, you see these guys. You see this equator? This PM will not go down. I'll write it down. It will not go down until that equator is taken. Yes. You see this range? That is why I was looking for buy opportunity. This market is not going to go down until this market finds a way to break here. As soon as this level is taken, fine, comfortable move to the downside in line. What? Our fundamental analysis. That okay now. So right now I'm not looking for sell. I'm looking for buy. And to go to 4 hours. 4 hours. What I did was simple. I spotted this divergence. Spotted this divergence. I see. That's correct.
Okay.
This divergence. And then when it comes to this low, the liquidity I'm interested in is not at the lower side. The liquidity I'm interested in is at the upper side because I want to sell. So I want the market to grab liquidity at the upper side and give me a sell. I'm not interested in the liquidity at the downside. But because there's divergence, I say, okay, I need a push. For me to buy, I need a push. And this is the push. Okay? And if you go to 1 hour, it's very clear. Okay? And what I told myself when I was here, that this buy to the upside is a fake one. It must have been moved to the downside. That is 50 to 61.8. And where is 50 to 61.8, guys? It's level. Okay? And then, so what the market did was to make this structure A, B, and C. It's an expanding flat, guys. Came to 50% retracement in weeks. And what did it do? Boom, to the upside. But because there was an announcement of increasing rates on euro, as soon as we had up to like 50 or 60 pips to the upside, it flush down. But the flushing down is also producing a structure that is not new to us. What is the structure, guys? The structure is this is A, B, and C. We have another A, B, and C. So we need another A, B, and C. Simple. I see. So instead of it to give me an impulsive move from the beginning, it's giving me 3 waves up, 3 waves down, we need a 3 waves up. 3 waves up. And these 3 waves up, guys, as soon as this is done, don't think that this is the end of correction that will not give you a downside. No. You can have 3 waves up, 3 waves down, 3 waves up, and the entire stop. Oh my God. I'm not supposed to delete this, guys. Let me do it again. can have 1, 2, and 3, 1, 2, and 3, 1, 2, and 3. So this in itself will now be W. Okay, the internal structure W
X, Y.
X and Y.
Y.
Okay, and then this three moves up will now be W, which will be corrected by another three goes down. That three goes down. Just for 8, 1, 2, and 3. Okay, as soon as that hit 50 to 61.8, guys, correct. Non-negotiable. Non-negotiable. We now make another 1, 2, and 3. I see. So this movement to the upside just be W, W, and X. Let's change the color to white. Let's change this color to white. X and Y. Now, by the time this Y get to this level, it will have probably to break it up. Don't forget, the quantity to be taking, not the stuff to be taking. Okay. By the time it comes to break this up, then that will be a comfortable level to sell downside. Remember, we want to sell you against card. We don't want to buy card against you. Buy this car. You are buying euro here.
Yeah.
You are selling car. That is understandable. Why is it understandable, guys? We are expecting
All is going down.
This currency, this coming session. Why do we expect car? Because if you go to US oil, you are going to see that this structure will break down. When this structure, when this 5 completes and it's breaking down, guys, when it's breaking down here, card become very weak, and as card become very weak, what happened to Euro card, guys? Euro card will also look upside. That's when Euro card is going to grab this move. And as soon as this move is grabbed, and US oil now pick a level as support and it's ready for a move to the upside, that is when, guys, the Euro card is going to have a massive move to the downside. That's how I'm looking at it. Is there anything that's contradictory there?
At all. They're balancing each other.
Yeah, that's how it is. So, then another trade that we have to look at.
Let us look at Euro USD.
USD. But sometimes now I don't trade USD because dollar is pushing them around. Dollar is pushing them around. But looking at this daily time, I've made up my mind. I'm not going to sell USD at this level. I'm not going to be a party to it, guys. If I get something like this, better for me. If I don't get a move like this to the upside, I'm not going to sell you. Okay, I'm not going to sell it. Okay, that's moved too far. At least it goes to carry last. The market has gone too far. What happened to those that are sold here? They don't want me. Why would I be selling here? This is a premium price. Here is not a premium price. To support. You think it's a little order that move this market from here to here, from this level here, to this level. It's a small order, not a small order, it's a big order. So if market is now at that level, corresponding level there, why would I be selling? That's logic. Why would I be selling here? I can be selling there because at the corresponding level, market was making a big move. upside. Big move to the upside. Even if I'm not going to have a big move to the upside, let me have a corrective structure here. And that would be, let me have a small corrective structure here. That is liquidity. Take me down. Because right now, you know, it's still suffering a lot. Energy crisis, inflation, all manner of things. Understand refugee crisis here and there, so on and so forth. So, but then that now this wine, right? So, go to smaller time from like 4 hours. 4 hours. I don't want to sell. I don't want to sell it. Until it makes a bigger structure. That's it. That's the logic here. Come down. I want it to make a structure like this. Do you understand, guys? This structure is a better structure. A better structure, yes, for you to sell. Not these small ones. All these small ones are just part of this trend. They are part of this trend. In as much as we're not able to join at this level, at the higher level, yeah, we're not able to join. We are not qualified to join here. That's not far. Here is still it's the journey here is not good. Because at any moment here, it can make a move. You understand? So leave you until you make some corrective structure. That's what not the least before we go for the game. Right? I hope you guys are getting some knowledge.
Yeah, a lot.
So look at it. This structure already. You have to move to the downside. So you see for everybody, we're still expecting more move to break this top. You see what's got to go high, down, no problem. Right? So same thing I said about the USD, same see here. This market report here. Minimum. Okay, minimum. That level. Boom. That's it. That's what I want. It doesn't have no action. No action. Right? No action. Because if we want to sell, we want to be tempted to look for a sell setup. As soon as this one come, as soon as this one come like this, but you have lost. So I don't want that kind of thing. That can want the structure. Or like what you say. Sell. That's it.
What about last one CHF JPY? I think the yen pairs have been buying. They've been buying, yeah. I think I don't know what CHF JPY.
Okay. Monthly.
Yeah, money. Those are safe rates.
Let's go to that.
It looks like the last move looks like a corrective. Yeah.
You know that this is a very tricky structure.
Yeah.
You know that this structure starts here. You know these three waves.
Yeah.
This structure is very tricky. You know that this is zigzag.
Yeah.
Then if you take a view of this wave down, now we target 78%. Yes. When it's a zigzag, always target 78%. When it's zigzag, it's a sharp correction. So sharp correction will get to 78%. Okay? So that's the information we have tapped from this monthly of course. That's got so much that you can't do anything about it right now. Except if it's a structure like this, comes like this, I still take this move the upside. Because remember, here, strong demand. Why is it strong demand? It's pushed to the upside, move this structure, move this resistance. For it to break this resistance, strong demand. Right? You make this structure, you can buy this to the upside. But as soon as you get here, right? Because we're going to have to move that. But right now, there's no setup. Why? You can't buy at this level and you can't sell. But if you want to sell here, what if you continue to drag it to the outside? Where are you going to do? Dragging it to the outside. Telling you that this correction is enough here. I see that the person is in trouble.
Yeah.
But you have to wait. Let's see if you develop this. If it goes down like this, it's enough. 50% upside. Or if you make a move like this, structure upside. Upside. Can you get? So anyone it makes your trip. But for you to be expecting sell at this level, don't expect selling.
Okay.
Because of what we have seen. Yeah, because of what we have seen in daily time.
Yeah.
In a monthly time from the I see that there's divergence here. That divergence here means a correction. That's the mistake of many. When they see divergence, they say, the side is strong. Divergence can also tell you that correction is strong. So, as soon as this has broken this stuff here, this one has broken this stuff, then this expect the possibility of expanding flat. This one bottom. See. And the necessity for having a bigger corrective structure here, because you have a long way to go. When you have a long way to go, you have a bigger corrective structure. The bigger the size of correction, the bigger the push to the upside. The smaller the correction, the smaller the push to the upside. Is that okay? Can you decide to do something like this and decide to do something like this? Now, this correction, this
push down.
2, 3, 4, and 5. ABC. All right. Then you can also decide to give you something like this. This. WX1. Can you see? All right. So you can decide to do so. All you have to do, see, you don't know what to do. Wait until this market gets to this. Okay, now assess this corrective structure and keep your trade. So that is it about
okay.
Then when we come next week at the base of the world, we're expecting
correction
to happen for USD card. When we do where right now you cannot take a fee because this impulse has not finished. So why do you want to take a fee when the impulse has not finished? But let's assume the impulse is finished here and the correction has started. Take a fee. By next week, we're expecting this market to come back to this demand. Minimally, not get like where stop loss. What do I put stop loss? Anybody guess below 78? That's where I put stop loss. That's why stop loss. Yes, some loss can be 30 pips. 20 pips. Target the stop. It's going to 170 is going to work. That's how we do it. Without now.
Okay.
Just like this one. This one came. Structure. The structure is good. I see the structure is good. So now the structure is good. That's good. All you just need to do is and because this is a zigzag, I told you every zigzag correction will be stop to 78. You get every zigzag correction must come to 78. As simple as that. And what do I do in that case? I just put it here. Once it comes to 78, just a little bit that 78. I see. That's how. Same thing we replicated here. Same thing we did here, guys. We're also expecting it here. But the type of correction that will form here, we don't know. But we are praying that the kind of correction that will form here will be the one that we understand. Something like this. If you feel, okay, if it's zigzag, target 78. It's not zigzag 50 to 61 point, so if it's flat. Solid is flat. It's flat is okay. If you move upside from here, just below 78, target. That's how simple. That's how it's done. Okay, guys, I think we have tried this evening.
Yeah, we have.
Any question?
There's so much to digest. Well, it's pretty good. Pretty good. Well, analyzed. For me, it was well analyzed. I mean,
Sir?
Any
question?
I don't have a question for now, sir.
Ali Games, any question? Any question? All right, no question.
No question.
Market did not work well this week, so we're not able to take many opportunity. But hopefully next week we're going to be trading well. We only took I think 2 or 3 trades this week. One with 200 pips and later came to hit break even. I don't care because I'm focusing on the 1,000 pips, not 200 pips. Okay, the other one, yellow card, hitting about 60-70 people. I'm coming back immediately due to Eurozone interest rate announcement. And then the third one was what again? One other trade.
G.
Eh?
GA.
Yeah, I've mentioned GA. I've mentioned.
Okay, yeah.
Yes. So we meet again next week, guys. Let's practice and read a lot over the weekend.
Yeah, thank you very much.
I believe we have all subscribed to this channel. I really want to improve this channel. I want comment. I want like. I want like on it. I want YouTube to show it to many people. I want it to benefit many people. All right. And I think I will be glad if you can comment, like, and share each of the video you watch here.
Yeah.
All right. So have a lovely night rest, guys.
Thank you very much. Really appreciate it.
Thank you very much, sir. Good night.
Yeah, good night.
Yeah.